What is going on, guys? Welcome back to the channel. Let's talk about muln. I missed you guys. Sorry, I was MIA yesterday. A little bit busy still from the long weekend. I hope you guys had a great time with family or friends or whoever you chose to spend your time with. Hope you guys were all safe and had an enjoyable extended weekend anyway. And we're back to the markets. We're looking at muln. There's some interesting things going on, honestly. I don't know. Let's look at it. It looks a little bit different today on my charts. I got the Bollinger Bands pulled up just because I wanted to see exactly kind of what was going on. And it's been a while since we've opened up quite this wide on the Bollinger Bands. We usually get some pretty decent action, it seems like, whenever they really want to start opening up, whether to the upside or downside. Last time they opened up and we were considerably below the Dow, which is my orange line that's running along here. I just have the Dow pulled up on my trading view charts just to kind of watch it. I like to trade it with SPY because you can kind of see if they get separated. You have a pretty decent idea if SPY is going to try to run back to it or if it's going to come down to it. So it's just up there, but yeah, we're widening out. We're getting a little bit lower on our bands. I mean, it could go either way, but as far as my trend line goes, it's breaking out as of right now, which is nice to see. So maybe it wants to head back to that neutral line. We'll see whenever they actually start closing in on us. Remember in the last video I said be very cautious around this 21 cent range because we never know when that's going to be the last time the 21 cents makes a nice trade for us. But so far it's still playing out. Just keep in mind as far as the 30-minute goes, we have a little bit of room that if it wanted to work its way down, it could. The 5 minutes trying to climb its way back up, which is nice to see. So, I mean, so far, so good. Game plan still working just as the same. I don't know if you're holding or if you're trading, and I don't care either way. I think a lot of you guys are traders if you come back here because I don't believe in diamond handing anything. But, it is what it is. So let's keep an eye on how that's going. The other thing that I thought was pretty interesting today was, I don't know if you looked at the ortex. I don't know if this is messed up, but this is pretty dumb, like dumb, crazy, insane. Cost to borrow average 436%. Is that messed up? I don't know. We'll look at it again tomorrow. Cost to borrow max 805%. The minimum's down here at 14%. So I guess if you can get your hands on those 14%ers, you're doing pretty good. If you're trying to short a 20-cent stock with this kind of percentage, it doesn't make sense to me. But I do like to see that the cost to borrow is at least increasing. That's a pretty decent sign for us. 12.2% live short interest percent of the free float, and coming in at 181.28 million. So let's see how that continues to play out as far as our cost to borrow actually increasing. Again, this is one of those things that you're trying to probably make any penny that you can, and a lot of people are going to say don't loan out your shares. I don't care what you do. It's your money. It's your decision. That's a pretty decent cost to borrow if you can pull somewhere around there. I'm sure your brokerage is not going to offer you that amount. So kind of see what they're giving you. You don't want them loaning it out for 400% and you getting 2% of it. But there's nothing that you can do about it that I know of. But let's keep an eye on it. As far as it's going, I mean, we're still doing our thing, right? We're still doing the 21 to 23, the 23 to 25. Nothing's changed, but like I said, I am watching the fibs as they're starting to expand. Usually when we get that contraction, it makes that move. So there's quite a bit of play that's going to go on here, which, again, our red light was our, 2019-18, so 18 cents is our red line. There is a little bit of room below there if for some reason it wants to come down, but as of right now it's not giving us the inclination that it is. It looks like it's trying to break out and upward with some strength, even though the market is coming down. It's really hard to play anything to the upside right now, especially considering what's going on with the overall markets. We know the overall markets are probably going to bleed down to somewhere before all the infused money was pumped into the system. So there's got to be some sort of rebalance. We don't know where that point is going to be and when things are going to turn around, but as of right now, Nothing's looking all that amazing going into 2023 to think that right now is going to be the turnaround. We're seeing a lot of 52-week lows on some of the big blue chips, which is bringing the overall SPY markets down in general. So EV sector, Tesla's getting destroyed. I think a couple other of our EV plays even that are possibly a little bit ahead of muln are still getting beat up pretty good. So I'm happy to see that we're at least holding. We're not doing anything else. I guess to the bright side would be after this vote, I'm pretty sure muln's going to have plenty of shares to be able to introduce to the market at some point. I don't know when they're going to come out or how aggressive they're going to be using them. But if we do think ahead to the future that 2023 might be a very rough year for a lot of companies, we know that muln's probably going to have enough shares on hand to at least be able to do what they need to do. It may not hurt retail investors. It may not, it may not be exactly what we want to see right now. Those are things that you need to think about, is how are they going to survive up until production and getting into 2023, and how's the economy going to be, how long is it going to be down. So keep that in mind. But I wouldn't be short thinking that I'm going to drive this company into bankruptcy, because they don't really have any debt, and all they're doing is creating ways to be able to have capital on hand whenever they need it. So let's keep that in mind as well. Just either way you're playing it, again, I don't care if you short it. I really don't care. It's your money, it's your play. Just, I'm just throwing out the information in my thought process. You don't have to listen to me. What do I know? I'm just a YouTuber. But we're looking pretty good. Post-market 2240 right now. It seems to be pumping its way right on up. So let's see if we can get some sort of nice move out of it. Cost to borrow maybe will help us, but a lot of those shares might already be in possession, at a much lower rate of cost to borrow, that they can just continue to reuse those shares. So it doesn't put us in the clear, but it might help us in the future for any new shares being brought into the market. At least we know that they're probably not going to be long term. If that kind of cost to borrow holds up, they're not going to want to hold on to it for very long, and they're going to need to be using them very aggressively to be able to make up the offset of what that would cost to borrow. But that is an annual expense, so don't get it twisted. It's not like it's crazy. I mean, it's crazy high, but we're talking about 20 cents. So that's what I got for you guys. Again, thank you so much for coming back. I'm happy to be back here with you guys, and we'll just continue to watch it. We'll see how it goes. As of right now, looking good. If you're still flipping it for pennies, trying to bring down any kind of risk reduction you have at the moment, still seems to be working. Just keep in mind, at some point, in case these markets do bleed and everything bleeds, then you just want to be protected. But I will catch you guys in the next video. As always, stay golden, people, and may your accounts stay green.